Mic check 1, 2. Hello, and welcome welcome all to today's stream. Today is Thursday, date 17th April 2025. I'm really proud. I'm really proud of how things are going. I'm really focused, and things are building up nicely. I don't believe I'm going to execute anymore this week. I did execute 2 trades, and I want to share with you the breakdown starting from the top. We do have less than 29 minutes to euro main refinancing rate, and this is going to be a very crucial stream for all of us. My hair looks messy, but let's get it on. Let me present my screen. So let me share my screen. So I do believe I can share my screen. You will be able to see my screen in the next few seconds to come. If you do have any inquiries, let me add this to stage. Yes, sir. We are good to go. We are golden. Let me change no, this one is better. This one looks better. Okay, that's much better. Yes, sir. So for the streams, it's advisable you use high quality for the information to be much clearer. Now, I want to go over to my YouTube. I'm streaming on YouTube, but I want to go to my YouTube, and I want us to look at from my playlist. I do believe it's daily analysis. Uh-huh. I do believe it's week 16. Yeah, it's week 16. So while I was doing this analysis, let me go over to gold. Where are you, gold? Okay, so this was the analysis that I had.
Out and the retest from this region, then this will enforce me to
And
look for further buying opportunities.
very interesting when you usually start the week,
is a safe haven.
and this is something I'm trying to build also. I'm not perfect, but I'm trying to build it as I go along, and it's all about let me mute this first, kidogo. It's all about building a plan before you actually do it. Yeah, for every minute you spend planning, you're actually saving 10 minutes building. And in the financial markets, it's going to save you a lot of time, money, resources in the long run, in the sense that the more you plan your trades, the better your execution is going to be, because you're going to eliminate emotions as a result. So when the week started, I was looking at gold. I was anticipating that there's a high probability prices will continue moving further to the upper side, and I did enter a position on gold. This Monday, I don't believe it was around 1. I've just edited it into a short video so that you can go watch it. But I was looking at opportunities of whereby gold will continue moving further to the upper side, and I did share it with you guys here. Now, if I can take you to the shots that I've just edited, so this week of, yeah, this was the trader. This was the trade. Let me like this. Let me like my own content. Oh, it's even putting okay. So this was the execution whereby I was looking at gold moving further to the upper side. and I did enter a buy position. This was Monday, and the position started going in my favor. But during the day, the position started retracing. And come yesterday, we did see the push, the massive push to the upper side, and it did net me quite a significant amount of profits. So if I can take you to my charts, this was the execution on Monday. This is what we were discussing on Monday. And then I did execute another position live with you guys. This was a USD card live trade. This was USD Canadian dollar live trade. If I can go to playlists and then my live trading, I do believe it was somewhere around this region. I'm using a new software, so it was card CPI. This, no, it was card CPI. This one. Yeah, so this was it. Whereby I did execute a position on Canada USD. Yeah, this was the position. This was the position that I did execute on USD Canadian dollar. And I want us to go over this trade first and foremost, because it's very interesting. You can see, yes, it did stop me out, but eventually it did go into profits. And I did take screenshots. This was why I was really advocating for people to take screenshots, whereby if you go to downloads, USD Canadian dollar, let me open this file. So this was the initial execution. You can see prices did go in my favor quite significantly. Almost how many pips into profit from this high to this low? Like almost 40 pips into profit, and then it retraced, took me out, and then the trade went into my favor. Now this is very interesting because it's psychological. This is bound to happen. You're bound to see this so many times, whereby in the financial markets you do execute a position and then the market takes you out. And it brings me to, I've just seen a post on X. I need to have an application for it. So this is my, I really like, and I love the algorithm because this is one of the few people when you to interact, we have interacted with Rufus Kamau on a personal level, and he's one of the, up here, this guy is very intelligent. He is very intelligent, the way he looks at the market. Right now, the thing that gets people enticed so much is about the technical analysis, these fancy terminologies of fair value gaps, order blocks, and it's good. But when you look at people who are real traders, I'm not saying that people who are practicing SMC are not real traders, but if you look at core real traders, where it all starts from. Yesterday we were live streaming about Federal Jerome Powell, and there was this question he was asked whereby you've just said, so the interviewer was like, you were saying that you look at data. What are some of the data that you look at? And then the first thing he mentioned was, I look at NFP first, then CPI, and then I was like, yeah, this is the Fed chair looks at fundamentals, and Rufus Kamau is very good, and there was this post he did have today that I just reposted. Let me look for it. Let me just look at my own because I did repost it. Where is it? It was a story he had. This was it. This was the story time he had for us today. And I was looking at this post and I did relate it so much, whereby he was like, story time, Brian and the beautiful breakdown. Meet Brian. He's a swing trader who spots what he thinks is the perfect setup, a textbook descending triangle on a mid-cap tech stock with declining volume and a clean support line. He spends 3 days deep diving earnings reports, watching CEO interviews on YouTube, drawing trend lines like a Renaissance artist. He loads up. Then prices fall. The breakdown never comes. Instead, prices starts to grind up against his entry. But Brian doesn't exit. Why? Because he's not trading anymore. He's defending his effort. This is still valid. If I can't cut now, not after all the work I put in. If I close here, I've wasted 3 days. So he holds. The stock rips 8% against him. His stop loss becomes a suggestion, not a rule. Eventually, he exits in frustration, not because the trade was invalidated, but because his ego got margin called. In trading, your past effort has zero market value. The market doesn't care how many hours you researched, only your next decision matters. Don't be like Brian. I saw this post and it was a really good post because it reaches a point whereby I was looking at it and emotions do come into play so much. You enter a position, you get stopped out, prices go in your favor. What do you think? Huh? You enter a position, you don't have a stop loss, prices go against you. What do you think? And it has an impact in your long-term perspective, in your long-term direction of how you look at the market. Because it's very emotional. We are emotional. We are creatures of emotions, not logic. Let me repeat that once again. We are creatures of emotions, not logic, especially where money is involved. So today we are going to look at this was just a breakdown of what happened. So this was the loss I did in car this week, but XAUSD did do me really nicely, really nicely. I did enter around this region here. I did enter on this. Actually, it was this on this candlestick here. So I've stayed in the trade for like 3 days an hour, and prices. Actually, I do believe this is one of my best trades so far, capturing almost 1,000 pips in the financial markets. That's good. That's good, and it does mean that I'm heading towards the right direction. In the past, whereby I did execute a position, I couldn't wait for it to mature. If it starts going, and I was talking about this yesterday in the live stream, whereby you enter a position around this region here. Now, for the next 24 hours, prices just stay within your entry price. And then the following day, you wake up, prices is in profit. Obviously, something is going to psychologically happen to your mind. And it has to do with, a fact, it has to do with MetaTrader, whereby the human mind associates with colors. I was listening to Jordan Peterson, and he was mentioning whereby we associate red with danger. But psychologically, to a primitive level, we were once fruit eaters. If you go back biologically, I was not there, but biologically, if we came from a certain animal, we were fruit eaters. How will you recognize a fruit is ripe? You look at the color and the shape, the shape and the color. So if you look at a beautiful lady who has beautiful physiques, the fruits are mature and ripe, then it shows you that it's mature essentially. So when you're looking at colors, if you look at an apple, the color is going to be very impactful. When you look at Forex, how does this imply to Forex? When you see a red candlestick, and I used to battle this so much when I was starting out. You open trading view and then the first color you see is red. Obviously something psychologically happens. If you open trading view in the morning and then you see blue, psychologically something happens. And it's very impactful because it's subconscious. It's not something that you're going to be taught. It's not something that someone is going to make you sit down and then when you see red in your MetaTrader, what does it mean? When you see green in your, when you see blues in your MetaTrader, what does it mean? I just exited a position and then prices are continuing to go in my favor. Obviously, something will go through my mind because I am a creature of emotion. So when you're looking at the financial markets, you're bound to see such things happen severally over and over again. So we have 15 minutes to go, and we have euro main refinancing rate. It's going to be interesting. I'm not going to be executing. I just want to look at what the world in general is going to do. But looking at gold is quite volatile at the moment. Now, remember, tomorrow is going to be Good Friday, and then the holiday runs through Monday. So if we were to see volatility, it will happen either right now, or the markets will wait for the holidays to come out, because when you're looking at the forex market, usually it's institutions, and you have to look at when institutions are in play so that you can be participating, because the bankers, institutions are the people who usually push most of the money. So if those guys are on holiday, then it means that we don't anticipate a lot of activity happening in the financial markets. Now, looking at the charts right now, gold, I've just exited this position, a really good position. It's netted me quite a significant return. I'm really proud of it. Now, looking at the dollar index for the past 4 or 5 trading days has just been in this tight channel. It's raining over here currently, and I hope that it doesn't affect the internet situation, because I am living in the outskirts of town. Yeah, we are people who decided to go out of town. We have stayed in rental so much. We don't want to do that anymore. And I hope that you also reach that point in life whereby you get the capability of owning a home, not a house. There's a difference between a home and a house. But volatility index, yesterday we saw VIX jumping to nearly 10% for the day, which was very interesting, because when not Trump, but when Jerome Powell was speaking, especially when he was asked, "Are you going to give more money to the central banks?" He was like, "Yeah, I'm going to give more money to the central banks," and that was very worrying. And we did see gold pick up quite significantly as a result. Now, today when we woke up, it's only the volatility index has lost 4.4%, 4.41% ever since the day began, and people are gaining confidence into the financial marketplace. We want to see how this is going to play out in the long run. But looking at US 500, very disastrous. We did hit stop losses last week. Yeah, this was last week. Yeah, no, this was this week. This was this week. So we did hit the stop loss this week, but where's Nasdaq? I've lost Nasdaq. So let's use Oanda. So US techs has taken a tumble this week, very anticipated. Looking at the 1 hour time frame, especially after Powell's speech yesterday, it was very worrying. We are back into the 61, between the magical 50% and the 61.8% Fibonacci that we did have from last week's low to the high that was made after the announcement of the 90-day pause on tariffs. We want to see how the markets are going to react to this region over here, because we did have a reaction to the upper side when prices came in between the $39,000 mark. So we want to see how the markets are going to. I don't like red, so let me change it to a neutral color. Okay, that's much better. But today's focus is going to be on Euro USD. Looking at what the charts are doing currently at the moment, we anticipate the euro to lower the interest rates. Now, looking at price action for the Canadian dollar, looking at price action for the New Zealand dollar, and all of those assets, whereby the news comes out negative, the market interprets it as negative, but the general underlying trend usually comes and picks up. So what I will want to see is that prices, this is going to be my view on Euro USD. I would want to see prices coming back down and then picking to the upper side. So this is going to be my execution plan. Now, pulling up a Fibonacci from, this is the low created during the week because this was Monday's opening price. From the low to the high, we are currently in between this magical region. So if this candlestick closes above the 61.8% region, I would want to look for buying opportunities for the trend to continue moving to the upper side. For a stop loss, I'm going to be very subjective about it because it's going to be dependent on my entry. We have less than 9 minutes to go. Let me remove this. We have less than 9 minutes to go. Actually, oh, the data has come out. I thought it was going to be 3:30. Oh my lord, it's at 3:15 already. So the data has already come out, whereby the rate has come out at 2.40%. So interesting. I was actually looking at it and I was telling, as I was communicating, yeah, I'll want to see these markets going further to the downside. So this is a good opportunity. I might just enter this position right now. A stop loss of like 20 pips. Let me just do that right now. Using a small position, using a small lot size. Remember, this is just for educational purposes. Huh? So let me have a 0.5. I was thinking that I'm not going to. So I've been filled out at 1.34. 32. I'm going to have a 30 stop loss. So my stop loss is going to be at 1.3, 1.13132. My take profit is going to be at 1.3, 1.14. Okay. Okay. Now, considering that today is Wednesday, tomorrow is today is Thursday. Sorry, tomorrow is Friday. Considering that tomorrow is going to be a holiday through Monday, I would want to be very cautious with this execution. But this is what I'll be anticipating for the markets to do in the next few trading sessions. Hopefully, tomorrow, maybe Monday, I'm willing to let this position run. I'm currently in profit, so it doesn't matter what it's going to be. I'll be risking like 150. 250. It's like 250, yeah, like 250 or so. Of which it's good. It's a good risk to reward ratio. One is 2.23, whereby if it goes in my favor, yes, this account is going to look very decent. It's going to be very enticing. Currently, I'm in profit, so I'm not going to be worried about what's going to happen next. But looking at what's happening currently, yeah. So ECB cuts rates. If you look at the markets currently at the moment, so euro is at 2.4%, Canadian dollar 2.75%, NZD 3.5. So GBP, the British pound and the United States dollar are currently at the top in terms of interest rates, currently at 4.5% interest rates. So the most important thing that you want to look at is what are other institutions going to do as a result of major European Union starting to lower the interest rates. So this is going to be very impactful. Yeah, I didn't say this. Trump, oil is always too late and wrong. Should have lowered rates long ago. Yeah, this was the yesterday's live stream. If you haven't watched the live stream, kindly go watch that live stream whereby we did talk about what we do anticipate in the financial markets, and this is very interesting to note. But looking at the calendar, So the European Union has just lowered the interest rates. I'm not going to be trading through unemployment rate. We do anticipate these numbers to come. Okay, let's wait for the unemployment rates and then we call it. We do have the conference coming up very soon at 3:45 UTC plus 3. So I think, yeah, we can wait it out kidogo. We can wait it out kidogo. Looking at this position, so this is the position I am in currently at the moment. Let's wait and see. I have a 30 pip stop loss. I'm targeting almost a 70 pip target profit. Let's wait and see what this is going to play out like in the few seconds to come. So if you're having issues with fear of missing out, if you're having issues with emotions, don't go trade demo, because demo is going to reinforce those emotions. What you can do is pick up a live account and then start small with the executions. So start with a 0.01. If you have anything above $100 and you're trading something like currencies, you cannot blow an account of $100. It's hard. Yes, you can, but it's so hard blowing an account using the smallest lot size available to you. If you want to practice out this information, it's going to be on your own accord. On the description, I do have links to the broker that I do trust. If you have any inquiries, kindly feel free to reach out. It's raining, it's hammering over here very aggressively. I do believe the internet connectivity still is going to be better. But let's wait and see for what is going to happen in the next. So unemployment, now, unemployment is usually lagging data. It's lagging data in the sense that if persons loses their jobs today, it usually takes a bit of time for them to go broke. Huh? But in the long run, you want to see how those numbers are going to impact the financial markets. So the trade is just around my entry price. But I want to see. Of late, things have been going really good. Of late, things have been going really good for unemployment. We have been seeing a consistent 200 K, of which it's good. It is good. We did have a spike around February. Very, very understandable. So in the next 1 hour, 40 minutes, 1 minute, 40 seconds, sorry, to be exact. But housing is also good because building permits and housing are very important. Huh? Because if people are given building permits, it means that loans, there is a high possibility that people are going to have loans to pool resources. There's going to be a lot of things that are going to happen. Let's say, for example, mortgages. There's going to be creation of jobs as a result because people have to build those houses. There's going to be people who are going to settle in those houses, who are going to be paying mortgages, who are going to be paying rates, fines, and all that, which in turn builds up an economy. So if building permits usually comes up higher, it means that in the near future, we do anticipate that the economy is going to do well, because housing is very correlated with how the economy is doing. Let's say, for example, if there's a lot of permits being offered, it means that banks are going to offer loans. Same. People are going to build those houses. There's going to be supplies because houses need raw materials, they need products, they need tiles, they need taps, they need cement, and this in turn builds up an economy. So building permits and housing is also something good to watch out for, because it creates a wide-reaching ripple effect. For example, jobs are created for the construction workers, subcontractors and inspectors are hired, and various construction services are purchased by the builders. So 3, 2, 1, let's wait and see. So spreads have widened. If you're trading, you'll notice that your spreads have widened. It's very normal for such to occur. The trade is still around that reason, so don't worry. So let's see. 25,000. Oh, that's really good. This makes me question my position that I am in. So what I'm going to do is I'm going to lower my lot size. I'm going to close partials. The trade is going in my favor, but I'm going to take off half of the position to reduce my risk kidogo. But the trade is going good. The trade is still going good. But this is really good to watch out for. Okay, so it's come out at 215,000 jobs, which is actually slightly better than forecasted of 225,000 jobs. But looking at an economy of nearly 300 million people, a difference of like 10,000 people doesn't make a lot of a difference, huh? It doesn't make a lot of a difference. So with unemployment, I don't anticipate a lot of activity. Generally, so the Philly Fed has come out negative, housing has come out negative, building permits has come out slightly positive. But looking at the forecast, we were looking at 1.45. The forecast is at 1.48, which is not quite that different. The margin of difference is not quite significant from the forecasted. Now, looking at housing, actually came out lower. Now, the Philly Fed is what I'll be looking at because we were anticipating a 2.2%. 2.2 index, we are actually at negative 26.4, which is quite alarming. The last time we saw that was back in the last time we had such a similar number was back in 2023, April 2023. Now, this is very interesting to watch out for because, okay, now this is let's look at this data, what it means. It's a level of the efficient index based on surveyed manufacturers in Philadelphia. How much does Philadelphia contribute to the GDP? People are doing some construction just besides me. So let's look at the economy of Philadelphia. So the GMP is at least $479 billion, quite significant. And we want to look at the key statistics. So they do have good rail transit, legal sector, medical facilities, okay, tourism, shopping, innovation. Okay, so there's not much statistics, huh? Based on the United States of America. Okay, there's not much statistics online, but how many people does it look at? So it's a survey of about 250 manufacturers in the Philadelphia Federal Reserve District, which asks respondents to rate the relative level of general business conditions. I would want to know these 250 people. Who are these 250 manufacturers? But why do traders care? It's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity such as spending, hiring, and investment. Now, this comes after the tariffs, and it does make sense. It does make sense because they are worried. They're worried these tariffs are going to impact business. Now, let's look at these 250 companies. I would want to know what these 250 companies are. This is where ChatGPT is very interesting. ChatGPT. ChatGPT, you cannot give me the companies. I just want to know what are the companies. Yeah, I'll get lost in all these companies. I do believe so. But the 250, I wish I knew if it was construction, if it was finance. That is what I wanted to get a hold of. Because if it was finance, it would have meant something. If it was manufacturing, it would have meant something. And looking at the chart, so my trade is still currently at my just slightly above profit. I've closed half of my position. Now the trade is now going into profits. But I would want to see how this is going to play out in the next few. So we do anticipate the ECB conference very soon. Bloomberg. Okay, let's wait and see how this one is going to affect us. What does this mean for us as traders? Are there any inquiries currently at the moment? Not yet. So we have like 6 minutes to go. But the data is worrying for the fully fed manufacturing. This is quite low. This is really, really low. The last time we were here was back in 2023. Before that, it was back in during COVID, the recovery times of COVID. Before that was back in 2017. Okay. What does this mean? What does this mean for an economy? Because it shows that people are not quite confident about what's happening. Are there any documents? Okay, currently there aren't. But I do believe these are the 250 major companies in Philadelphia. So above zero indicates improving conditions, below zero worsening conditions. So currently at the moment, the markets are contracting. I wouldn't want to have this stream longer. Interesting. Very interesting. Look at how this candlestick. I love this execution so much. Look at how this candlestick went below regions of liquidity and then it's starting to reject those regions aggressively. Now, when the stream started, I thought, and this is something I want to apologize, I thought that it was going to be 330. It was 315 because I'm used to trading US and news releases so much at 330. But actually the data came out at 315 at 2.4%. Quite interesting stuff currently at the moment. So unemployment came out not that bad, but not that good compared to the general scope of how many people are in the United States. Now, the thing that really worries is the Philly Fed manufacturing index coming out at negative, indicating that these are contractions. This is a contraction. The Philly Fed. Okay, so the next highlight of the day is going to be ECB. ECB. So let's wait for this. Come on. This was a really good entry. This was a really, really good entry. I could have, if I had buy limits below this region, I could have had a better entry, but I don't want to speak about that because it's only a difference of how many pips between the perfect entry and my good entry. 6 pips, not that much, not that quite different. I do believe that, and I will want to pay attention to this stream in the sense that what are they going to say about the tariffs? Because today is the day they were supposed to speak about the tariffs. What does it mean? What does it mean for them? What does it mean for them? So if this trade goes well today, if it goes really well, I think I might adjust my take profit to these highs. Let the trade run. Forex is all about letting your winners run and cutting your losses short. So let's see what this guy is out to say.
The person who believes in himself.
Volatility index is down 5% for the day. Dollar index 0.2%. Gold almost near the opening price of the day. Not almost, it's down 0.5%. I saw people buying gold today and I was like, yeah. I don't look at it as a good opportunity right now buying. There was this meme I usually liked so much. It was like, when I buy, it sells. When it sells, it buys. Okay. Some activity right now. Look at the timing. Look at that timing. Really perfect. Spot on. So if you want to trade Forex, it's a chart of price against time. So you have to respect time. And these people do respect time. A bit of photo session here and there. Hey, man, you're blocking the view. we're seeing photographers. We are not seeing the people. So buying gold today is not a good idea. I don't believe so. I don't know what I'm saying, but I don't believe so. Okay, so US30 is back into that region, the Fibonacci region. I don't believe also the other assets. No, not yet. Yeah, it did tap into the magical region. A perfect rejection at 5,234 for the S&P 500. Nasdaq, similar story. US30, perfect. This is really good. This is really good. Looking at the Russell 2000, not doing anything. Treasuries have been picking up ever since Friday. We have had how many percent from the opening price to currently where it is at 2.59%. Okay. Good afternoon too.
Good afternoon and welcome to the ECB press conference with President Lagarde and Vice President de Guindos. And my name is Wolfgang Preußel. We have participants online. When they take the floor, I ask them to unmute and to put on their cameras. And with that, I hand over to President Lagarde, please.
Thank you very much, Wolfgang, and good afternoon, good morning to those online. The Vice President and I welcome you to our press conference. The Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook,
how are tariffs affecting the market,
and the strength of
tariffs is all about especially when you look at European Union now, the thing that really got people worried was
inflation has continued to develop.
US are a very big supply target
and core
for
inflation declining in March.
German vehicles. When you look at BMW, when you look at Mercedes,
has also eased markedly
they are the biggest consumers for that. So when they had this tariff set in place, all of a sudden companies were very worried because it means that they are going to charge the same vehicles much more, meaning it's going to lower into their profit targets. So this affects the market because when you look at these companies, there are investors behind those companies. So if all of a sudden people come up and say, okay, we are taxing more, then it gives investors, it means it's going to eat into the investors' profits. So what usually happens is that investors start cutting back on the investing.
Confidence among households and firms, and the adverse and volatile market response to the trade tensions is likely to have a tightening impact
that was
on
what I was
financing
speaking
conditions.
about.
These factors may further weigh on the economic outlook for the euro area. We are determined to ensure that inflation stabilizes sustainably.
So the central bank target is usually 2%.
Especially in current conditions of exceptional uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So the economic outlook is clouded by exceptional uncertainty. Euro area exporters face new barriers to trade, although their scope remains unclear. Disruptions to international commerce, financial market tensions, and geopolitical uncertainty are weighing on business investment. As consumers become more cautious about the future, they may hold back spending as well. At the same time, the euro area economy has been building up some resilience against the global shocks. The economy is likely to have grown in the first quarter of the year, and manufacturing has shown signs of stabilization. Unemployment fell to 6.1% in February, its lowest level since the launch of the euro. A strong labor market, higher real incomes, and the impact of our monetary policy should underpin spending. The important policy initiatives that have been launched at the national and EU levels to increase defense spending and
So the thing
infrastructure
about interest rates
investment
and
can be expected to
how
bolster
an economy
manufacturing,
revolves is
which is also
when you
reflected
lower
in
interest rates,
recent
basically you're
surveys.
telling your consumers, you're telling your people, go take
In
loans.
the present
It's much
geopolitical
cheaper to take out a
environment,
loan right now. So
it
the
is even
central
more
bank does that
urgent
to stimulate an
for
economy.
fiscal and structural policies to
But
make
on
the
the other
euro area
hand, if
economy more
inflation
productive,
is going to be
competitive, and
relatively
resilient.
higher, it
The
means that the
European
central banks are
Commission's
going to increase
competitiveness
interest rates
compass
to
provides a
discourage
concrete
spending and
roadmap for action,
encourage investing.
and its proposals, including on simplification, should be swiftly adopted. This includes completing the Savings and Investment Union, following a clear and ambitious timetable, which should help savers benefit from more opportunities to invest and improve firms' access to finance,
Yeah, people who are selling
especially
gold right
risk
now,
capital. It is also
may the
important
pips be with
to
you.
rapidly establish the legislative framework to
It is
prepare
very
the
volatile.
ground for the potential
Because if
introduction
someone saw,
of the digital
someone
euro.
bought here,
Governments should
140
ensure
pips in loss.
sustainable
My
public
God.
finances in line with the EU's economic governance framework and prioritize essential growth-enhancing structural reforms and strategic investments. Annual inflation edged down to 2.2% in March. Energy prices fell by 1%.
Now the European Union is a
after
very, very,
slight
very
rise
big
in February,
consumer
while
of energy.
food price inflation rose
So if
to
energy goes down, it
2.9% in
means the
March,
economy,
from
the
2.7%
inflation
in
rate is
February.
going to lower also.
Goods inflation
But
was
looking at
stable
oil
at
prices,
0.6%.
Brent oil is now trading at
Services
$66 a
inflation
barrel.
fell again in March
WTI is
to
trading at $62 a
3.5%,
barrel.
and it now stands half a percentage point below the rate recorded at the end of last year. Most indicators of underlying inflation are pointing to a sustained return of inflation
Yeah, so the
to our
target is usually
2%
2%.
medium-term target. Domestic inflation has declined since the end of 2024. Wages are gradually moderating. In the last quarter of 2024, annual growth in compensation per
So I want to
employee
see how this
stood
region
at
holds up.
4.1%,
This
down
magical
from
region here.
4.5% in the previous quarter. Rising productivity also meant that unit labor costs grew more slowly. The ECB's wage tracker and information from our contacts with companies point
That
to a
region of
decline
demand. I want to
in
see
wage
how it's
growth
going
in
to play out.
2025, as also indicated in the March staff projections. Unit profit fell
So if
at
the
an
daily
annual rate
candlestick
of
closes above this region,
1.1%
it will give me
at the
further
end of
confidence
last
of
year,
holding on to this
contributing to
trend.
lower domestic inflation. Most measures of longer-term inflation expectations continue to stand at around 2%.
Why is she reading this
which
from?
supports the sustainable
Because I'm
return
looking
of
at her
inflation
and
to
her
our
eyes are
target.
straightforward, but
Let's look at the risk now. Downside
is she
risks
reading
to
it from
economic
somewhere?
growth have increased. The major escalation in global trade tensions and associated uncertainties will likely lower euro area growth by dampening exports, and it may drag down investment
There was a
and
concern
consumption.
about
Deteriorating financial
goods
market
being
sentiment
stuck at
could
the
lead
port
to
because of the
tighter
tariffs.
financing conditions, increased risk aversion, and make firms and households less willing to invest and consume. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, also remain a major source of uncertainty. At the same time, the increase in defense and infrastructure spending would add to
I
growth.
want her to answer about the same thing the Fed chair was
Increasing
asked
global
yesterday. What
trade
are you going to give the
disruptions
central bank
are
more money?
adding more uncertainty to the outlook for euro area inflation. Falling global energy prices and appreciation of the euro could put further downward pressure on inflation. This could be reinforced by lower demand for euro area exports owing to higher tariff and a rerouting of exports into the euro area from countries with overcapacity. Adverse financial market
the 1 hour
reactions to
candlestick
the
is about to
trade
close in the next
tensions
2
could
minutes.
weigh on domestic demand and thereby also lower inflation.
This 1 hour
By
closure is going to be
contrast,
very important. If
the
we do close,
fragmentation of global supply chains
below
could raise inflation by pushing up
1.3368,
import prices. A boost
I'll be
in
very cautious
defense
about this
and
position. Remember,
infrastructure
I've
spending
offloaded half of the
could
position
also raise
already.
inflation over the
So
medium
if
term.
it closes below that region, I'm closing another half
Extreme weather
position.
events and the unfolding climate crisis more broadly could drive up food prices by more than expected. Looking at the financial and monetary conditions now. Risk-free interest rates have declined in response to the escalating trade tensions. Equity prices have fallen amid high volatility and corporate bond spreads have widened around the globe. The euro has strengthened over recent weeks as investor sentiment has proven more resilient towards the euro area than towards other economies. The latest official statistics on corporate borrowing, which predated these market tensions, continue to indicate that our interest rate cuts
if
had
it
made
close
it
above that
less
region, above this
expensive for firms
support
to borrow.
region here, which
The
also
average
coincides
interest
between
rate
the
on
50 and the
new loans to firms
61.8% region,
declined to
which will
4.1%
give me
in
further
February
confidence of this
from
trade.
4.3% in January.
When is the next 4-hour candlestick
Firms'
opening?
cost of issuing market-based
So the
debt
4-hour candlestick is about to
declined
close in the next
to
1 hour.
3.5% in February,
If we do reject
but
this
there has
region
been some
significantly,
upward pressure
if we
more
get this
recently.
candlestick closing at least 50%
Moreover,
of the move,
growth in lending to firms picked up
confident that the
again
markets will
in
continue
February
moving further to the
to
upper side.
2.2%,
Remember, the markets usually move with
while debt
impulses and
securities
corrections.
issuance by
Could this
firms
just be a
grew
correction?
at an
And we might see another impulse
unchanged
coming up
rate
very soon.
of 3.2%. At the same time, credit standards for business
So the 1 hour
loans
candlestick is
tightened
closing.
slightly
And the way it's closing,
again
it's
in the
very,
first
very, very,
quarter
very,
of
very interesting.
2025, as reported in our latest bank lending survey for the euro area. As in the previous quarter, this was mainly because
Gold
banks
sellers.
are becoming more concerned about the economic risks faced by their customers. Demand for loans
GU is picking up. Okay, this is good. This is
slightly
good to
in the
note
first
because
quarter
GU and the
after a
EU are
modest
positively
recovery in
correlated.
previous
Now, if
quarters.
GU has started leaving the train,
The average rate
I
on
missed
new
out on this
mortgages at
beautiful execution, but it's okay.
3.3% in February increased on the back of
Okay,
earlier
so the 1 hour
rises
candlestick
in
has closed
longer-term
with the
market
doji.
rates. Mortgage
an
lending
indecision
continued to
candlestick.
strengthen in February, albeit at a still subdued annual rate
So we
of
are in profit currently at the
1.5%,
moment.
as banks eased
this is
their
good.
credit standards and demand for loans
So
to
if you're here when the
households
stream
continued
started,
to
you'll be like,
increase
how many pips
strongly.
in profit like me? 17?
So in
Not bad.
conclusion, the
17 to 20
Governing
pips,
Council
that's good.
decided today to
If I
lower
can
the
be giving
three
you 20
key
pips a
ECB
day, oh my
interest rates
lord.
by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target,
I'm currently
especially
at
in
$50
current
in
conditions
profit.
of
Now
exceptional
this is whereby
uncertainty.
I'm
We
like,
will follow a data-dependent
if
and
wishes were horses, I
meeting-by-meeting
wouldn't have
approach
closed half of
to
the
determining
position,
the
man. Hear
appropriate
me.
monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming
But it's
economic
good.
and financial
I make
data,
peace with that fact.
the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing
This is the second time she's
to a
repeating that
particular
statement.
rate path.
We are not pre-committing to
In any
any
case, we stand ready
fixed
to
interest
adjust
rate.
all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions.
So let me adjust stop loss to profit.
And today the first question goes to Annette Weisbach of CNBC. Annette, please.
President Lagarde, thank you for taking my question. The first one would be on the rate cut. So 25 basis
So let me
points.
adjust
Has
my
that
stop loss
been
to entry
backed by
point,
everybody,
which
and
is
has
at
there been a discussion about potentially cutting by 50? And then I would like to know your assessment about the re-inflationary or disinflationary effect of tariffs, because there the jury seems to be still out, but you seem to rather err on the side of that it has disinflationary effects. If I'm reading through your statement, perhaps you could tell me if I'm right. Thanks.
Well, thank you so much for your two questions. I can confirm to you that the decision
So I've just moved
to
my
cut
stop loss to
rates by 25 basis points was a unanimous decision.
So whatever happens, I'm not going to lose money on this trade.
Were debated, but there was no one to argue in favor of a 50 basis points cut, for instance. So 25 basis points was definitely the rate cut on which all in the room agreed.
She is the president of the ECB. What a
Looking
wonderful
at today,
job, man.
and
Yeah.
I will happily address the issue of why we actually cut rate, because I think it's a twofold
She has the keys to the
rationale.
printing machines,
But
man.
looking at today and the tariffs debate that is going on, as well as the tariff impact.
It is a team, but she is the president.
We know that it's a negative demand shock. We can anticipate that it will have some impact on growth, but the net impact
this is going
on
to be for me
inflation
for the stream.
will
If you
only
have enjoyed
become
it,
clearer over the course of time.
welcome once
And
again.
there are
Stay
diverging
safe, take care of
views
yourself.
as to the short term